Hey everybody, this is John and welcome to the free video. And we're going to look at the spiders here real quick on the daily and weekly chart. Today they really did nothing. That's been the trend over about the last 10 trading days where we continue to consolidate. Volatility via the average true range continues to plunge. And essentially this is all very bullish and I'm looking for a move into 207. That being said, there is a lot of volatility in key stocks today. LinkedIn was down 4.5%, and there was actually a lot of stocks that were down 4.5%. Here you can see that although the volatility in the overall stock market is decreasing, some volatility in individual stocks is increasing, okay? One of the best ways, I think, to take advantage of this is what we talked about on Saturday in terms of debit spreads. And I do like a debit spread setting up here on Netflix. This is one where you can set it up as a vertical or a diagonal, but essentially we're buying a slightly in the money put and selling a slightly out of the money put. And the idea here, of course, is that if it collapses, you still get the max profit. And I think that's one of the things that people don't understand about debit spreads. If it explodes through your sold option, that's okay. That's a max profit. You've limited your gains, right? But on the other hand, if for some reason it doesn't work, you're also greatly limiting your risk. And this is the best way to create consistency. What happens is when you do credit spreads is that 10 times out of 12, they work great, but then the 2 times out of 12, they don't. You lose all the money that you made over the last 8 or 10 instances, okay, if you don't know how to do defense or if you're not able to watch it full time. So that's something in Netflix there. And then the other one I set up today was Jazz, and we talked about this during the class. And if you look at this, it's like, oh my gosh, Jazz was down today. That's perfect for this type of a setup. So for Jazz, we were looking at something where we had this fairly great weekly chart that's in a nice uptrend. And we have a squeeze, okay? And then today it was down $5. It's like, oh my gosh. Well, on the daily chart, it came down to the 21. So this is another great example of a debit spread. And if you put it in here at the 8 EMA or the 21 EMA, either one's fine. If you put it in at the 8 and it came down to 21, great. Guess what? You buy the short side back, and then tomorrow you sell a new Delta 20. Okay, and that's how you kind of bring in some credit and continue to reduce your overall net debit to the trade. Okay, so is it a big deal that this fell by $5 today? On the one hand, I mean, don't get me wrong, it's so much easier when a trade works out right from the get-go. But the whole point of debit verticals and debit diagonals is that it's taken into account the fact that a stock is not always going to act the way you think it will when you think it will. So what happens in a situation like this is great. You do a debit or a diagonal. On a day like this, if you bought it at the open, you buy back the short side at a profit, okay? And you roll it out the next day into a new Delta 20, and you continue to reduce the cost on your trade. Now, it's possible that this thing just falls like a brick and never recovers, okay? And that's okay. You've reduced you've kept your equity curve fairly straight because you're reducing the overall loss on the trade by continuing to sell options against it, right? And it's a debit, it's not a credit. So it's a debit, so your loss is fixed. But on the other hand, too, what happens a lot is that you get this big down day, you bring in that credit, you sell another one, and then it stabilizes and doing what? Goes in the direction of its primary trend. So it works out pretty good that way. The other thing to keep in mind is that there are very specific stocks that are going to thrive in this current market environment, okay? And there are some stocks that are going to get killed. Stocks that are going to thrive are stocks like in the XLP sector, which is consumer staples, okay? Stocks that are going to get killed are typically ones that are in something like the Russell Index, okay? And there's a very, very, very specific reason for this, and it's what's going on in the dollar. And I want to tell you that what's going on in the dollar is deliberate, it is ongoing, and it's going to continue going higher, and it's going to have repercussions across all of the commodities and all of the stocks. And if you don't understand what's happening, you're going to get killed. So the thing that's going on is which is going to affect everything over the next 2 years or so, is the US dollar. And here's the dirty little secret to this. There is The only reason the dollar is going higher is because the US government wants it to go higher, okay? So the two questions are, one, why does the US government want it to go higher? And two, how is that going to impact everything else? Okay, so that's what I'm going to be talking about in this free video. If you go to simpleroptions.com/ETF video, do your first name and your email. I'm going to talk about that and then also talk about how to take advantage of it with ETFs and why trading options on ETFs cuts your risk so you can sleep at night, how you can profit with ETFs from the unexpected move in the dollar, which is going to be big and ongoing and on purpose, which a lot of people don't realize, okay? And the great thing about ETFs is you're completely avoiding the high frequency trading that's going on by the high frequency trading firms, okay? That's the information. There's the link, and looking forward to seeing you on the webinar.